Hi, good evening, and welcome to Lesson 3 of the Intermediate Tax Topics. Section is talking about credits. This is the third video in this particular series. The series began with Lesson 1, which was a credit overview, Lesson 2, which is the child tax credit, and we'll continue after this particular lesson through the remainder of the credit series. So here we're talking about the credit for child and dependent care expenses. You need to have a qualifying person in order to claim the child and dependent care expenses. So the first thing is the qualifying person. That person must be a child who's under age 13 when the care was provided, your dependent who is physically or mentally incapable of self-care, or a spouse who's physically and mentally incapable of self-care. So there is that requirement for the credit to be valid. You do have to have a qualifying person for whom the care was administered. So looking at the first problem here, we have Sandy, or example really. Sandy pays someone to care for her husband, Dan, so she can go to work. Dan is physically unable to care for himself. Sandy also pays someone to care for her daughter, Jenny, while she works. Jenny turned 13 on April 15th. Which dependent care expenses can Sandy use to figure her credit? A, Dan's expenses only. B, Jenny's expenses only. C, all of Dan and Jenny's expenses. Or D, all of Dan's expenses and Jenny's expenses through April 14th, 2016. I bet you can guess which one it is. It's all of Dan's expenses and Jenny's expenses through April 14th, 2016. So because she turned 13 on April 15th, you would stop being, any expenses past that point would not be eligible for the credit. Deanna is 26 and not mentally able to care for herself. Her brother pays someone to care for her while he works. He supports her and can claim her as a dependent. Is Deanna a qualifying person for her brother? And the answer here would be yes. Deanna is a qualifying person for her brother, and he can claim the expenses for her care. The credit for the child and dependent care expenses, it must be the custodial parent. The custodial parent can treat the child as a qualifying child even if he or she cannot claim the dependent exemption for the child. So this is very different than the child tax credit. The non-custodial parent cannot treat the child as a qualifying person even if he or she can claim the child. So here for this particular credit, this credit goes only to the custodial parent. The non-custodial parent, even if that's the individual that pays the daycare bill, they would not be able to claim the credit. Only the custodial parent can claim this credit. So here, Adam and Cassandra are divorced. Their daughter, Sally, lives with Cassandra 9 months of the year. The remaining 3 months she lives with Adam. Cassandra has signed a statement allowing Adam to claim the exemption for Sally. She pays for daycare for Sally so she can work. Who can claim Sally as the qualifying child for the child care expenses? Adam or Cassandra? Here you'll see that only the mother, Cassandra, because she's the custodial parent, and can treat Sally as a qualifying child for the credit. So requirements to claim the credit. The first one is the care has to be for one or more qualifying persons, which we just discussed how you have a qualifying person. 2, you have earned income for work performed during the tax year. 3, the care is provided for the qualifying person so you can work or look for work. 4, the payments are to someone who is not your spouse or your child under 19 or a dependent that's claimed by you. So you cannot show that you are paying somebody within the household to care for the child. Your filing status needs to be single head of household, qualifying widower, or married filing jointly. You are disallowed claiming this credit if you file married filing separately. And 6, you must identify the care provider on your tax return. So here are a couple of scenarios. The father's not claiming his 2 children that live with him, and he pays for daycare. So in this case, the dependent is not claimed. It is an eligible expense, and it can be claimed. You've got a married couple with 3 children. The mother pays for daycare 2 mornings a week so she can take aerobics. So you do have dependents, 3 dependents. They're not eligible for the expense because it's not for work. It's so that she can do aerobics. In the next scenario, we have a young couple with one child, and wife was in school 6 months and paid for a babysitter while husband worked and she studied. She began working in September and the baby was a babysitter all year long. So in this instance, they can claim the credit, and you would have eligible expenses for school and for work. So the 6 months while she's in school, she can claim those expenses. And then after she started working in September, but she would not be able to claim, I guess it would be July and August for that year. The couple above split in April, after which the husband had custody. Can he claim the credit? And the answer here is yes, and he would be head of household, and he would be able to claim the credit for all the months since he was working during that time. And they were split up during the July and August timeframe. So there's some examples so that you can have a better understanding of when the credits can be claimed. Figuring the credit, in order to calculate what the credit will be, we need to look at the work-related expenses. So for the care of qualifying person while you or your spouse work or looked for work, and for the qualifying person's well-being and protection, and you can count expenses for a child in a grade below kindergarten. You can also count the expenses for after work, after school programs, before school programs, and summer if it's necessary in order to work on time. So the amount of work-related expenses that would be eligible for the credit would be limited to the lowest of the actual expenses. So depending on what you paid for the daycare, you could not claim a credit above that amount, or your earned income. You cannot exceed the income of the lowest paid spouse. The idea there being if it costs you more for daycare than you earned, you can only claim the credit up to the amount that was earned. And there is a note here that in the event that a person is a student or looking for work, they are credited with $250 per month in income, for the purpose of what would be the amount that they could qualify for this credit. And then the third caveat is that the dollar limit is capped at $3,000 for one qualifying person or $6,000 for two or more qualifying people. And that's reduced in the event that there is employer-paid dependent care benefits. We will go through those dependent care benefits, which we talked about during the W-2 section a little bit later. So to figure the credit, what you're going to do is the amount of the actual credit is a percentage of the eligible work-related expenses. All of this is calculated in Form 2441, which has to do with the dependent and child care credit. The ranges of the credit range from 35% to 20%, and it is based on the adjusted gross income. So this is what that section of the Form 2441 looks like, where you would look up the individual's adjusted gross income, and here you can see if they made up to but not over $15,000, it would be 35%, and there is no limit on this particular credit. So if they earned over $43,000, it would be a 20% credit. So to claim the credit, you're going to take the total amount of dependent care benefits you can include, and it's limited to the smallest of the total number of benefits, the total amount of qualified expenses you incurred, your income, your spouse's income, and $5,000. This is with the dependent care benefit if that's part of what your employer offers. So what you're going to do is you're going to take that amount that's in your 41. So the first section here is to enter the total amount of dependent care benefits that you received. So on line 12, we're going to enter whatever was in box 10. Then the next thing that we're going to do is we're going to carry over if there was any amount that we didn't use in the prior year that we wanted to go ahead and take up this year. And then if you carried over anything into 2017, you would take that out so that you're not being hit with the taxes for it. then you're going to do the math here and come up with the total. And this is the total of care dollars that are with your employer. So then the next thing that you're going to do is enter the total amount of qualified expenses, and you're going to look at what is the smaller amount, either line 15, the amount that was eligible, or line 16, the amount that you actually spent. And then we're also going to look at your earned income, and if you're married filing jointly, both incomes, look at the smallest of that amount. And so you see here we're just filtering down the dollar amount that could possibly be included in the credit. And then what we're going to do is we're going to just deduct the subtract the amount that was eligible to be included with the amount that we actually used through the year. And if the amount is smaller and we actually had more money in the pot with the employer than what we spent or than what we earned, then that amount becomes taxable. In the event that you used more than what you had, you would be able to take the credit on the remaining amount. So the key thing here is we're going to complete this Form 2441, and that's going to be used to report all of the information. And as we use this tax software, it will actually determine that smallest amount of the smallest amount of the smallest amount on your behalf. So you don't need to worry about that, but I do want to explain how that is handled. So on the Form 2441, you want to clearly identify the Social Security number or the EIN of the daycare provider, whether that's an individual or a business. And then if the information is incomplete, the IRS may disallow the credit. So it is important that you have the appropriate information available when you go to claim this particular credit. And the Form 2441 is used to figure the excludable amount of the dependent care expenses as well. So most of the tax software would pull in the 2441 when it starts asking questions about dependent care. So this is the dependent care credit. Again, the key things are that it must be for the care of someone unable to care for themselves, and the IRS defines that as a child under the age of 13 or someone that is mentally or physically unable to care for themselves, and the care is provided for you to earn income. So you must either be working or looking for work. And it must be primarily for the benefit of the individual who is being cared for. So that's the dependent care credit. And if you have any questions, please feel free to contact us via our website. We can be found at freedomfinancialpartnersllc.com. And the information here is based on Publication 17, Chapter 34, as well as Form 2441. As always, I hope that you find these videos helpful and informative. Thank you very much for your time.